Good morning, everybody. How do you like it? 5/6/2011, May 6, 2011, anniversary of the flash crash. Not only that, we created a viral video during that live event, and it was live, just like that earthquake in Japan was live. What we're going to talk about is we said that corrections were coming in commodity markets 2 weeks ago. We clearly have a track record on the stockmarketfunding.com website for you to see and learn from free. Is that what happens is that the big money investors are like gamblers and they bid these things up to extreme levels and down they come. And today is a weekly Saturday expiration, which is tomorrow, in options as well. So we're just going to take a look today that after the unemployment number came out, we got a gap in the Nasdaq, and short-term 1 day, 3 day, 5 day price actions. What do I mean? Oversold 1 day or oversold on the 3rd day. You're always going to get bounces before you make lower lows. And what has happened with people who want to engage in the markets, in my humble opinion, I mean, after studying the human behavioral transaction tape in equities, options, and all instruments and futures and things, is that for some reason there's been a big part of educational part that's been left out for people, and that's what goes on behind closed doors. And why this deck is stacked against you from the start. Today's trade management will be the following MMTs. Haynes, we did an after hours last night. That was in earnings. You've got a bull gap of 3.19 ratio because that TQQQ, as we've been pulling back in phase 1 pullback, we're only in phase 1. Phase 1 also requires a bounce to a lower high and then another rollover to make a lower low across the board on percent averages in the broader market. So we're taking the jobs number. That's a headline event. Those came out good. That created a futures market trade, which raises the price of equities artificially. On the opening bell, the SMF MMT trainee apprenticeship, a trainee, will learn how to let the climaxing part of the price action get put in, take that short sell, maybe it's a contraction pullback, it's still a gain, come out and then get ready to go long. Now, the thing about this market is, because they got some good data, we've had a big short in sectors such as gold, commodities, oil, everything that we've shown on the stockmarketfunding.com website that would happen going back a couple weeks ago. Go there, hit a search, SLB, and you'll get all the related videos and all the live action right there. You'll see all the live analysis, and you'll see exactly where the markets are, and you'll see where we say that everything is still overbought. They're not as overbought as they were, but they're still in the overbought category because they are. So that means that the upside of the moves that are getting what we call futures volatility price action gap before the opening bell, then the buyers will step in. The public is really going to start stepping in, and that's where the transactions are going to drive them to either higher highs and or a sell on the open. It doesn't matter. That's what you're going to be looking for. Okay, so let's take a look at the gap open down list today. It's diminished, it's contracted compared to the other days in pre-market. Okay, price line is going to be a wild trader. We did that live. Man, that was a good one last night. That Blue Nile was in earnings. We had earnings on some of these other misses in here. The bear, watch that SQQQ. That's that bear that's been oversold forever. So basically, the top side of the market still will be in an overbought territory. The short side of the tape is to walk the long side up But the bigger part of the trade will be when they slide that bid, as long as it's not earnings related. Today there's going to be some short covering on the opening bell because of the good jobs report. Once again, that's a headline event. That's creating this gap open list on the Nasdaq. And what's going to happen is the stocks that are already overbought that continue to get gaps, because you see you have 1 day, 3 day, and 5 day zones, and then you start working into, you know, the second set of that 5 day, which equals 10 days. It doesn't matter. It's all about the directional way that the overall market is in, and everything is still overbought. Earnings season's winding down, but we have a very long expansion list versus the contraction list that you've seen. So you can see how the pre-market futures can work both on the sell side and the buy side. So what goes on in the futures are being bid up on the good economic data, the jobs report that surprised people. We have oil coming down. We have all of that to keep this exuberant overbought process going. However, the trade management will remain the same.